Base set prices have plummeted. Evolution's Charizard prices are down too. Is this the end of the Pokemon card bull market? Today we reveal the truth you need to know. Hey guys, so before we get started with this video, we recently reached 1,000 subscribers. I posted a video recently where you can ask questions for the 1K Q&A, so make sure you visit that video and drop a question there before it's too late. Thank you as always for your amazing support. Let's get back to the video. I'm KAKASHI with Kanto Capital. So has the bubble popped? I've seen a lot of people looking at these well-known charts and saying, well, this is obviously a bubble. And I can understand if someone doesn't normally look at charts and look at this types of stuff and they think that. They just see this steep incline. They see the prices rise like on this chart shows, and they think it's a bubble. But these charts is like looking at the front of a card and declaring it's a PSA 10 before you even looked at the back. You might have an idea of the condition, but it's nowhere close to an accurate grade until you actually flip the card over. Well, these charts are pretty much the exact same thing. Looking at this chart and seeing that steep incline does not tell you what the condition of the market is. I mean, it sort of does, but it's not even close. It's the difference between a PSA 4 and a PSA 10, which doesn't say much. What I can tell you is that the real data shows a very different story from a bubble. And yes, I'm serious, just like I was 2 months ago. So here's the charts again that everyone's looking at. These are, general Pokemon charts, and they all kind of look the same. And whatever chart you're looking at, you just say, wow, look at that spike. That is a big price move. And I've been saying that myself lately. What huge, wild price swings that we've had. And we see how steep that incline is. And I keep hearing, we must be in a bubble now. The end has to be near. And the big problem I have with that is that everyone is looking at the wrong charts. And to be completely clear, I don't know where we are exactly in this market cycle yet. Maybe the bubble has popped, to be fair. But here's the reality. The data clearly shows that there's also plenty of room to go up too. And we're not as overextended as most people think we are. To be honest, I was even surprised how mild this movement actually is. And yes, you heard me. I said mild, not wild, mild. Let's look at the base set unlimited PSA 9 Charizard. What's really interesting is I've seen a lot of people in different places, so not in this channel, but in different places, asking about this card a lot. Some of you veterans of the channel might remember that I used this exact same card to analyze the market a while back. And even though it's not entirely reflective of the market we're in right now, I still think it's a very solid chart to look at. So here it is again. This is the chart or similar charts that everyone's looking at. We see the steep incline and everyone thinks bubble. And we've been hearing this for months now. But what's funny is that in price movements like this is not the chart you want to look at. You can look at it, of course, and it's better than nothing. It's better to know something of what's going on than nothing. But as I said earlier, when you look at this chart, you're really only looking at the front of the card. Luckily for you, I took the painstaking time to build the real chart. So what we have here that I built is a weekly chart of our recent price action. I literally sifted over 700 listings manually. I removed the false positives, I removed the obvious shill bids, and confirmed the actual best offer prices. So make sure you give this video a thumbs up for the hours of work it took me to put all this data in and to pull all the information. And yes, hours just to put this one chart together. Once I go back to my normal activities, this is an example of the type of stuff I won't have time to do, at least without this channel completely blowing up, or a Patreon or something, some type of setup. So enjoy this while you can. For those of you who watched my original market analysis video, you'll see this is a continuation of that data, but this is the 10 times better version because it was actually necessary here. So this chart here is going to look a little bit different than what you would normally see on, let's say, most popular finance websites. This is a candlestick chart, and it really gives us a better depiction of the market action that is actually happening in the market. So let me take some time to explain this chart so you know exactly what I'm talking about. So each candle that you see on a chart, they're going to have both a body and wicks. So the body, of course, is the actual bar that you see, so the solid bar, either green or red, and then the wicks are those thin lines. I'm sure you gathered this already, but when the bar is green, that indicates the price went up for the day, and of course, a red bar will mean that the price went down for the day. Now here's where things get a little tricky. For a green bar, the bottom of the green bar is the price at the open of that time period. And this is a weekly chart, so each bar is going to represent 1 week. So on a green bar, the bottom of it will be the price at the beginning of the week, and the top of the bar will be the price at the end of the week. The wicks, which again are those thin lines at the top or bottom of each of these candlesticks, those represent price action throughout the day. So maybe the price didn't close or begin at that price during the week, but there were transactions that did happen in that range during that week. So what each candlestick ends up giving you is actual price action and price movement, giving us a better picture of how things actually happened. One of the reasons why these candlesticks are so important for this analysis is because a single sale does not reflect the new value of a card. You can't just have a new value because there was one sale. But because we're in this huge bull market, it feels like every sale is the new price. But that's what happens when we're in a seller's market. That's what happens when we're in a bull market. But this is not always true. So people like myself who have experience in volatile markets, we look for price confirmation so we don't get caught holding the bags. We don't want to be one of those people who bought at the very top. And these candles help provide better data on how to prevent that. So here's what we have. The price movement is big, but it's also measured and logical. You can see this reflected in the large candles from week 11 and 12. Week 11 is the first large green candle, and that is riding off of the back of the Logan Paul and the influencer hype. During this week, we see prices move from about $2,000 to just under $4,000. Now, week 12 is more interesting because this is where we see overlap between the two candles. So we see overlap between week 11 and 12. So even though we saw prices shoot up in week 11 all the way up to almost $4,000, we see on week 12 the price opens on the lower end of the range, closer to around $2,500. And then we see again the prices move up during that week. So this overlap represents a little bit of price confirmation and confusion as the market's trying to figure out, is this the new price for this card? And it's a positive sign to see that because it means the market was looking for some type of confirmation before they continued the upward trend and people kept buying in the $3,000 and the $4,000 range. And of course, we see in week 12, we settled above $4,000. Now, if we jump over to candle 14, when the prices start to come down, the retrace so far is actually very textbook, and it's technically exactly where you'd want to see it go from a technical perspective. You could argue week 14 is an extremely bearish candle due to the large volume spike. You actually can't see the volume, but there was a lot of transactions and a larger volume that week compared to the prior weeks. However, what I personally see, and this is just my interpretation, but I see that large candle though as more of a natural reaction after the big price spike. On top of that, the retrace in price actually pushed perfectly, just absolutely perfectly back to prior trend lines and newly established support. So I'm going to now show you the trend line that I drew out, and you'll see it lines up beautifully. I mean, you literally could not draw it any better. It's like an example in a textbook, except this is real life. It's such a perfect example of why I love technical analysis so much. What we have was a price that was overextended, but then it came back down at just the right time, which allows other important metrics to cool off. Things like RSI and MAs, which I don't have charted here, but they can start to return towards equilibrium. To be completely clear and transparent, This does not mean that the prices will hold at that support line. We can absolutely drop lower, but for now, the retrace back to the support lines are exactly what we want to see. Unfortunately, this is not a situation where someone can just make consistently accurate calls, but if someone forced me to guess, most likely we're going to see a consolidation period where the price should track sideways for a while. However, it's anyone's guess how long that will actually be. I mean, it could reasonably consolidate from anywhere from 2 weeks to 6 months, and it would all be reasonable. What is especially interesting is that once I actually built out the chart, the price movement on the weekly chart is actually somewhat mild for such a volatile and infant-like market like Pokemon. Yes, the daily price action was crazy, just watching that price move up day after day. But when we look at the weekly price action, which is what we see here, lets us see everything from a broader perspective. And the weekly chart shows a much more logical picture. Yes, the prices movements is still crazy, there's still big moves, but it's not as crazy as it feels while we're in the eye of the storm. This chart lets us look at the storm from the outside where it's safe. I did analyze several other cards that I thought would give us an even better picture, but that would have required building out even more charts, and I probably would have had to go over maybe 2,000 transactions. So I didn't do that, and the data, even though it's not exactly the same, the end result should be very similar in overall scope. So before we get into even more details, these are the charts that everyone looks at. But when the price movements get this crazy, traders and investors shouldn't be looking at these charts. Instead, what we look at are log charts, which factor in the scale of the price movement. And this is very important. So I'm going to use an example. When a Pokemon card is worth $1 and it goes to $2, it has doubled in price. But what happens when it goes from $2 to $4? It's also doubled in price again. So the problem is that in a standard chart, that move looks huge, even though the percentage move is exactly the same. And that's the problem with rapid price action like we've seen with Pokemon recently. A log chart, however, scales the charts so that these movements actually match based on their relative percentage gains. And so that gives us a better idea of the strength of these movements at each time interval. What you'll notice is that when I pull up the log chart for the same card, is that for Pokemon, this price movement is mild enough that it doesn't register much more volatility or price action than some of the previous weeks on the log chart before this massive spike. And this also aligns with my earlier conclusions in this video. This was a big move, but it wasn't that big. And I have to keep saying this doesn't mean that prices will keep going up. There are no guarantees. But I just thought it was interesting after looking at this chart and realizing that the movement felt a lot bigger than it actually was. Of course, because this is Pokemon cards, we don't normally have these types of charts available. For you guys, I do use actual charts to help illustrate and use as examples, but practically speaking, I don't really need them because I sort of can chart them in my head through experience. Although, of course, I definitely prefer to have them for the most accurate data. I used technical analysis for this video, which is used by many stock market traders. Now, just to be clear again, TA is not predictive. It does not predict the future. What it does do is it helps paint a picture of what's actually happening in the market. Think of this analysis as giving us odds on what will happen next or kind of keeping the score. You could be up a lot of points, but you can still lose the game. And just because you have good odds and you can win 9 times out of 10 doesn't mean you're always going to win. And the same thing goes for technical analysis. So yes, this is a very long version of prices might go up or prices might go down. But to be completely real with you, to be completely honest, that's exactly where the market is right now. Because we're in a blue sky breakout, there's less predictability and the price action is going to be wild. And that's exactly what I said was likely to happen 2 months ago. The price action has been wild. Once we breached the resistance line that I talked about in my very first video on this channel, predictability got thrown out the window. What I am hoping for is that this retrace will actually start to reveal what might happen next. But as of now, I'm in a wait and see mode for the most part. I'm waiting for the signals to reveal themselves. To be fair, as a long-term investor, I really have no intention of selling much of anything if the bubble pops, so I'm not clinging to the data and watching intently what is going to happen next. I just use that information to adjust my strategy going forward. It wouldn't surprise me at all to just see prices consolidate for a while. If that happens, the market should have time to regain its footing before we see what happens next. And that will very likely be the calm before the next big move. Regardless of what happens, just remember what inspired you to start collecting Pokemon cards in the first place, and let that enjoyment carry you through whatever happens next. I'm Kakashi with Kanto Capital. If you haven't seen my first market analysis video, be sure to watch that because it connects directly with this one and will give you a better understanding of where the market is headed. I'll leave a link to that video below. Have a great day, do great things, and I will see you in the next video.